All right, thanks, Amy. Good evening, everyone. Doug Teeter, member of the Butte County Board of Supervisors. Welcome to the Butte County Insurance Briefing with United Policyholders. Getting and keeping insurance has become a big topic of concern for local homeowners, and I'm looking forward to the presentation and your questions afterward. It's my pleasure to introduce tonight's first speaker, the Executive Director for United Policyholders, Amy Bach. Amy is a nationally recognized consumer advocate for policyholders and an expert on insurance trends, claims, coverage, law, and public policy matters. Amy is in her second term as an appointed member of the Federal Advisory Committee on Insurance and has been an official consumer representative with the National Association of Insurance Commissioners since 2009. She is also a member of the Fire Victim Trust Oversight Committee. Amy, thank you for spending this evening with Butte County residents and for making affordable, available insurance your mission. I turn it over to you.
Thank you so much, Supervisor Teeter, and it's just a pleasure to work with you always. Although unfortunately, it seems to be under adverse circumstances. So maybe I look forward to celebrating the completion of your rebuild home, and that will be a positive event. So I want to say good evening to all of you, and it's my pleasure, my staff's pleasure, to be able to bring you this briefing and talk to you about what resources are available to you to navigate this current situation that brought us here today. So if you want to follow along with the slide deck tonight, you can go to uphelp.org, and then you go to events. You see it in the navigation bar, that gray one. Click on that. It'll take you to the landing page. And then you can see on the right there, the slide deck. So if you want to download the deck, it might take a few minutes. You can do that now. You can do it later. Just know that the content that we're going to present to you tonight is being recorded. It will be available to you to watch at your convenience. If you miss something or you're confused by something, you'll be able to go back. You'll also be able to go into the deck and read it later on. So a little bit about United Policyholders. We've been in business since 1991 as a consumer advocacy nonprofit. Some of you may have taken advantage of our Roadmap to Recovery program if you were impacted by the Camp Fire. We run 3 main programs and various initiatives. One of them is called WRAP, the Wildfire Risk Reduction and Asset Protection Initiative, which you'll hear a little bit more about later. Our specialty is explaining insurance matters in plain language, sort of translating for you the lingo that insurance companies use. And just know that we have been working very hard to help Californians in wildfire-prone areas keep their homes insured during the current crisis. So through our Roadmap to Recovery program, we help people recover from losses. Through our Roadmap to Preparedness program, we help people make good decisions about buying insurance, keeping their assets protected. And we've had a heavy focus in recent years on mitigation, which we'll be talking a lot about tonight as one of the most important ways to try to hold on to affordable insurance. Okay. So that's me with the fire marshal and a firefighter in a California community back in 2016, when insurers started to really be more strict about vegetation around homes and starting to drop homeowners in areas where there were in WUI areas, wildland urban interface areas, and in areas with a lot of trees. So we started doing the work that led to us being here with you tonight quite a few years ago. And so we've been bobbing and weaving and developing ways to help you as this crisis has gotten deeper. And so one of the things that we have been doing was, after I met with these folks and saw them I did a ride along with them. They visited a homeowner who had gotten a non-renewal notice, and they were going to the home to give the homeowner some suggestions about what they could do to convince the insurer to change its mind. So that had given me sort of the gem of an idea that, well, if that's what firefighting agencies are doing around the state, that's a great thing to try to build off of, because when if insurance companies have confidence in firefighting agencies, that will help counter some of their nervousness that they are experiencing, largely with a lot of the technology that's coming insurers' way. They're using drone imagery, they're using data mining, and they can just have a much more magnified view of homes that they've been insuring a little bit more blindly. And now that they can see things a lot more clearly, it is definitely part of what's driving their shrinking appetite and the rising prices, along with their worries about future wildfires. So this ride along kind of was a very important point in our development in the programming that we're bringing you. So I have an amazing expert panel today. These are the folks that are going to be with us. You will meet them as we go. And each of them brings a piece of information that will help you keep your assets protected. So I have an ask of all of you. Please log on to this link here on our website and just take a few minutes and take our survey. It's a California home insurance survey. We've been using this survey to keep our finger on the pulse. Are your rates doubling? Are they tripling? Who dropped you? Who did you replace your insurance with? So this is our organic way of helping you, is to kind of know what's going on. So thank you very much for spending a few minutes to take our survey. What's the bottom line here? I think most of you probably already know a lot of this, so I'm going to go through it quickly. In brush heavy regions and areas impacted by past wildfires, that's Butte County, home insurance options are very limited. Premiums have doubled and tripled. Lots and lots of people are finding themselves with no place to go other than the FAIR plan. California is experiencing a crisis, but it's not just us. It's other states as well, partly because of what I was explaining about all the tools insurers are now accessing that are making risk seem a lot more vivid to them. What's the law right now in California? Your insurer can non-renew you for any reason other than your skin color, religion, all that sort of thing, as long as they give you 75 days notice, right? It used to be much shorter. Now the legislature extended it twice to 75 because people need more and more time to find insurance these days. Some good news: the first mandated insurance discounts for mitigation, for risk reduction, were approved for the FAIR plan. So if you're with the FAIR plan, you can learn a little bit tonight about how you'll be able to qualify for their recently approved discounts. And that's thanks to a lot of work by a lot of people that brought about those discounts. And we are hoping, not hoping, we know other insurers will be having to also offer mitigation discounts. But that is a work in progress, because a lot of the other discounts that insurers are supposed to now be giving are pending approval with the Department of Insurance, because a lot of the insurers came in, as they were required to do, with new rates that were supposed to reflect a break for people who created defensible space and harden their homes in compliance with the Safer from Wildfire standards and the IBHS standards, which you'll hear about tonight. But when the insurers came in with their mitigation discounts, some of them were less than what were warranted, and so it's they haven't been approved yet. So that's a work in progress. But we've got the FAIR plan discounts, and we'll talk about that tonight. You'll hear about the FAIR plan options. And then you'll hear a message very clearly from my organization that even though times are tough and prices are high, you still want to avoid underinsuring your assets. And just a message that we have to keep putting out there, even though for a lot of people are just scrambling to get any insurance, let alone adequate insurance. But we still want to remind people, and of course, anyone who lost their home in the campfire knows this, that having enough insurance is critically important. Some of you may have heard in the news a recent announcement by the governor and insurance commissioner Lara that they are going to expedite some processes to try to bring insurers back into the market and restore insurers' confidence that they can do business in our state and collect the rates that they feel they need in this new era. And it's obviously a delicate balance. So Warren Bullock is a broker and realtor with American Homes and Land right there in your backyard in Paradise. Warren, how is this crisis impacting real estate values, buyers and sellers in Butte County? Let's make sure you're not on mute. Where are you? Warren, did we lose Warren?
I believe we have.
Okay, bummer. We'll come back. We'll come back. The current rules will review. Your insurer has to give you 75 days notice. We already talked about that. The government cannot force a private insurance company to insure your home. The FAIR plan, on the other hand, must take all comers with a few exceptions, and they have to give a discount to those whose homes meet the Safer from Wildfires standards or the IBHS wildfire prepared home standards. New rule, your insurer has to tell you if they are using a risk scoring system, like a credit score, a number that they've slapped on you, and then tell you what your score is and give you a process for appealing if you feel like you've been unfairly rated too risky. Here comes Warren. Warren will be with you in 1 minute. Thank you. I'm glad you were able to rejoin. And just a few more notes. Insurance pricing in this state has to be prior approved, not excessive or unfairly discriminatory. A lot of you are going, my rate feels excessive. But the reality is that insurers are, one of the reasons it's become so hard to find a policy is that insurers feel like the rates are not adequate. So it's a balance, and the Department of Insurance Lisa's agency is working really hard to try to strike the right balance between what insurers are saying, because of course they're saying we don't, we need to, with climate change, this changes everything, and we have seen some insurers go insolvent in Louisiana and Florida. So we're, it's important to have the right balance here. We're trying to find it. Admitted insurers in California, meaning, and I'll explain that to you in a little bit, have to give mitigation discounts, but approval is pending, right? So I told you about that. This is just some lingo that you can read on your own. The main things that you want to pay attention to here is this admitted, non-admitted, two kinds of insurers, fully or lightly regulated. SIGA, that's the insolvency program that we have. Insolvency means they went belly up, they went bankrupt, they didn't have enough money to pay the claims that they had committed to, and there's only only admitted insurers are protected by SIGA. So if you move your insurance to what's called a non-admitted, and there are more and more of those companies covering homes these days, if they were to go belly up, you wouldn't have the SIGA protection. So it's something to pay attention to. And then the other two pieces there have to do with scores and the numbers that insurers put. This is a publication you can find on our website. What do you do if you've been non-renewed? A lot of you were protected by non-renewal moratoriums that were tied to wildfires. But as time passes, if there's not a new fire, those moratoriums expire. So some of you may be getting those non-renewals now. Start shopping right away. And that is the main message. This is a question I always ask my agent volunteers. So I'm going to hit this one over to you, Carl Sussman. If you get a non-renewal notice today, is it worth trying to argue back with your insurance company? Let's start with Carl, and then Phil, if you have anything to add.
I think it's always worth a try, but it depends primarily on what it is they're non-renewing you on. If it's something fairly obvious, like overhanging trees, and you have trees that are overhanging and touching your roof, then immediately you want to get back to them and say, okay, I'm going to cut those down, and you need to get them proof that it's done. And it has to be done quickly because, again, they have that window of time that they have to put you on notice about being non-renewed, meaning they also have a window of time for them to reverse that before the policy has to be non-renewed.
Yeah. Phil, I think we talked at one point about the fire hydrant issue, right? Wasn't that you had some success there?
Well, that's a longer term solution sometimes, because there is an option to lobby if it's the fire hydrant, if that's a factor that's putting you in a protection class 10. And I know some irrigation districts have a process to request consideration to have a hydrant installed, and sometimes, and if you can get the ISO mapping and everything to come together, then that is something, usually that's at least a year-long project. But that is something to work on. I have seen success there in a few cases. And but again, I mean, just kind of echo what Carl said, I would definitely do the best you can to appease whatever questions are being asked of you, but at the same time, I'd simultaneously aggressively be looking at every other available option in the marketplace too. So you're not just going to sit and wait for the hope that they're going to find your home now acceptable if there was something that was out of line, or they change their appetite. You're going to not waste any of those precious moments to look for the next best available option.
Right. So start shopping. And while you're shopping, you can also, if take issue, if you can, with what if they gave you a specific reason for why they were not offering you a renewal policy. Where can you turn for help? There are basically two kinds of insurance agents. They're independent agents, also called brokers. Both of our gentlemen tonight are independent agents, which means they have access to multiple insurers. If you've been buying your insurance for years from, say, a Farmers or a State Farm, and they may not have as many options for you because they're limited by their contract with their insurer. But these days, Farmers agents have a little more flexibility than they used to have to put you with a non-admitted insurer. But generally speaking, you're going to find more options through an independent. The Department of Insurance certainly has some resources. You can shop online, and then the FAIR Plan is there, and we'll hear more about that soon. How our organization is helping by doing things like this. We're helping people navigate the crisis and keep your assets protected. We're advocating in everywhere we can to restore affordable, available property insurance options. We're doing everything we can to help facilitate home hardening and defensible space, promoting grants, all that stuff. We're working with our partners, the Department of Insurance, our agent broker volunteers, people like Steve Hawks, who's with us tonight, IBHS scientists. There's so much good energy right now in going into helping individuals and communities reduce risk, and that's one of the most positive messages I can give you tonight. My organization, through a grant that we got from the Governor's Office of Emergency Services, we are hosting a mitigation help center, so you can go on there and click on your county and see who's offering grants and who's got chipper days and that sort of thing. And then we have a monthly working group where we have been for over 2 years now, spreading good ideas from around the state of, who's got a good, who's doing a good event to kind of promote, help people with mitigation, who's figuring out a way to administer grants or matching grants and that kind of thing. And then we're dialoguing with insurance companies, trying to listen to them and to the extent that we can work with them to bring them back. That's what we're trying to do. I mentioned that there are there are actually 4 kinds of insurance companies. There's the admitted ones, fully regulated. There's the non-admitted, not as regulated, but a little bit more nimble in today's market. There's government sponsored, which would be the FAIR Plan, the California Earthquake Authority, the National Flood Insurance Program. And then there's forced or lender placed. One of the things that I spend a lot of time worrying about these days is people being on a tight budget. And when it comes to putting food on your table or paying for your insurance, you're going to put the food on the table, right? which means that if you have a mortgage and you stop paying your insurance, the mortgage company is going to force place a policy, and that's going to be expensive. It's not going to cover a lot, and it is going to increase your debt. But that is a reality for some people where they just feel like they don't have a choice. So that is happening. We are trying to really keep our finger on the pulse of that. We know that as we go into areas impacted by wildfires, we are seeing more people without insurance. I talked about SIGA, so we're not going to go too much deeper in that. But this is, again, this is the that backstop. And as some of you in your area know, the one company in recent memory that went under, was the company in the aftermath of the Camp Fire that didn't, just was overexposed, and those folks have had to get their claims paid through the Insolvency Protection Fund. So these are just some of the names you might see that are the non-admitted companies, and they have picked up a little bit more market share here as this crisis has been playing out. This is a website where if you want to check out an insurance company's financial strength that you've never heard of and you're not working with an agent, this is a place you can go to see if they are strong enough to deserve you putting your trust in them. Another thing that's been challenging, folks, is that a lot of insurers have gone from allowing you to pay in installments to requiring their clients to pay in full upfront. Phil or Carl, do either of you want to comment on this?
Well, I think it's a de facto backwards credit check is really what it comes down to. Credit can't be checked for personal insurance in the state of California, and that's unique to California. And I think this is just one of the ways that the industry is trying to cut back on some of its exposure by having people that can financially afford the policy in full upfront. They potentially would have a lower threshold for having claims. It's unfortunate, but I think that's really why it's happening.
Phil, is the FAIR plan? I know you might cover this when we get to you. Have you guys gotten the payment plan going?
I think that's going to come with the new technology, and I can touch on that in my presentation. It was more of a technology issue, and I think that's going to be something that will be more available easier to do with the new platform that's being rolled out here in the next month.
Okay.
And I was just, and just further to add to that, I think that's really something we're seeing more in the auto insurance space, where that's really where you're seeing the companies just make it less convenient. Where they had the options before, and if you work with the carriers in other states, they still have those options open in other states. But when it comes to California, the buttons and the options are different, and again, it's just not as convenient for the consumer at any stretch.
Yeah. So and just to try to we did get a question, what is a non-admitted? So if you go to the slide deck, that you'll see a link to a publication, or actually I'm going to ask Katie, if you can put in the chat a link to the publication about understanding the different types of insurance policies. That would be great. All right. Obviously, some agents and brokers, we got two of them right here, are helping by getting up to speed on the FAIR plan. A lot of agents didn't really know a lot about the FAIR plan. They didn't send people there. They didn't have to. But that is kind of fast forwarded. Most agents today, if they're still operating, they're going to know about the FAIR plan. But there's a big difference between agents out there. There's some that are just so freaked out by what's going on that they're having a hard time, I think, keeping their doors open, and understandably. And there are other agents that are doing everything they can to find options and stay current. And that's the kind of agent that you want. You want an agent who's got integrity. You want an agent who's staying current and who's knowledgeable about the FAIR plan. This is a web from the UpHelp website. We have a publication that talks about the FAIR plan. Actually, Phil and the former head of the FAIR plan helped us write this. So it was blessed by them, but it is probably what you're going to hear right now from Phil is a little bit more current. So Phil, as I mentioned earlier, is the public relations representative for the FAIR Plan, and he runs his own agency. So he's got a unique role. And I'm going to stop sharing for a minute. And Katie, if you want to share Phil's slides now, that would be great. Or Phil can do it. Whoever's going to do it fast. Probably Katie. There we go.
Going back to Warren. Wasn't sure if we're going back to Warren or.
Oh, sorry about that. Yeah. Why don't we let's let Phil do his thing, and then we'll jump back to Warren.
Okay, awesome. All right, so we're just going to go through just some basic overview of the FAIR Plan first, and we can just kind of get into a little bit more after that. So the FAIR Plan was created in 1968. The purpose of the FAIR Plan is to assure stability in the property insurance market for property located within the state of California, to assure the availability of basic property insurance as defined by this chapter, and to encourage maximum use in obtaining basic property insurance of the normal insurance market provided by brokers, by admitted insurers and licensed surplus lines brokers. And it's to provide for the equitable distribution among admitted insurers of the responsibility for insuring qualified properties. There's actually 118 insurers in California, 132 surplus lines carriers, and just one FAIR Plan. Go to the next slide. The California FAIR Plan is the insurer of last resort. It's not a state agency and not state or taxpayer funded. It's not for profit. It's not subject to Proposition 103, and accepts properties regardless of wildfire exposure. Next slide. As far as from the broker standpoint and really the consumer, you definitely want to do the best you can to perform a diligent search throughout the voluntary market first. You want to make sure that you basically, there's no stone unturned as far as options. So if you like what you hear at a broker, you feel comfortable, or at a particular agent, they're giving you a recommendation, you know, we would really encourage you to look a little bit further. It doesn't hurt to hear every school of thought before you ultimately make your final decisions. The FAIR Plan does not determine the adequacy of the requested limit. So what's being submitted, the FAIR Plan does not determine that. That's something that's determined between you and your broker, or the consumer and the broker. And the FAIR Plan does not verify insurable interest. The FAIR Plan provides a commission to the brokers. They receive a 10% first year new business commission, and then on the renewal of the premium, they receive an 8% commission for that. Brokers are not agents or representatives of the FAIR Plan, and brokers are not authorized to transact insurance coverage or receive information from others on behalf of the FAIR Plan. What? So this is really shocking, and you guys can relate to this. So 2018, basically the Camp Fire was really a catalyst where we saw tremendous growth again. And the FAIR Plan, as I mentioned, was established in 1968. It was around the time of the Watts riots, and also I wasn't born, I wasn't there yet, but there was also, I heard there was also major wildfires that year, and at that time frame. So that really was a point where the carriers in California were feeling there were certain markets that they were not comfortable insuring. So the FAIR Plan was created. There was not a lot of use of the FAIR Plan all the way up to the Northridge earthquake, which was 1994. And then between the Northridge earthquake and Camp Fire, there was not a lot of utilization. And just to kind of give you some perspective, in 2018, at the time of the Camp Fire, the FAIR Plan had 50 employees. So you can really know that it was a program that was being utilized at a lower level throughout the state. You know, therefore it made sense that there wasn't extensive resources being put into it from a technology standpoint. It was serving its purpose. It's intended to be a short-term need in resource in the state, and really the goal is to see the market restored to where the FAIR Plan's not needed. But basically, we know the trend is going in the opposite direction, so that's really what we're looking at here. So just kind of looking at where we are as of August through August, the growth that we've had, and So in the last 5 years, the crisis was really the wildland urban interface. So that was the WUI. We basically saw it all happen from when the company started. It was after Merced. The company started non-renewing, getting off of things. There was multitude of things that were occurring. Some company carriers more aggressive than others, but over the last 5 years, we've just seen the consistent shift in the WUI from traditional carriers to the FAIR plan. And now with some of the other appetite changes, we're seeing not just the WUI, it's homes all throughout the state. Every market is impacted. I was in Los Angeles County last week at the Insurance Commission meeting there, and it's all throughout the San Fernando Valley or markets that are nowhere near the wildland urban interface. You can't get your and I'm sure Carl will touch on this too, but investment properties, if you have a landlord policy and you need it occupied by a tenant, today that's very hard to insure anywhere. So it's going to end up in the FAIR plan. So my point is lots of policies today, a lot more policies today are falling into the FAIR plan. Over the last 90 days, we're seeing a drastic increase. So it's no longer just a wildland urban interface concern. It's a statewide concern. The direct impact of the action the carriers are taking is driving a lot of business to the FAIR plan, where just 60 days ago, 90 days ago, we wouldn't have dreamed of putting these risks with the FAIR plan. So the FAIR plan is just getting a flood of additional customers that in a normal sense don't really belong there, but there is absolutely no other option in those cases. We can go forward to the next slide. This is just interesting slide to look at, and again, it doesn't encompass the whole state. It's basically just some Northern California markets and Southern California markets, but it's basically the size of the campfire, the radius of the campfire. That's kind of the intention, to give you an idea of the exposure that the FAIR plan has in certain areas. So you can see and it doesn't, the central counties are not on there, so it's not every county, but it's just to give you an idea of how much weight the FAIR plan has in these areas, how much exposure, and it's concerning, because it's obviously those premium. If there's a catastrophic event, the size of the campfire in any of these areas, the FAIR plan alone, you can see what the exposure is. You can go to the next slide. So this slide is a snapshot of how the FAIR plan's role has and continues to evolve in the past couple of years due to insurance availability in the private market. FAIR plan is a high-risk pool, and by law, the insurer of last resort. In plain terms, the FAIR plan continues to grow and is being asked to cover more risks outside of its original role. For example, the FAIR plan now covers farms and recently expanded its commercial limits, $20 million per location. By law, the FAIR plan is required to have actuarially sound rates and is authorized to purchase reinsurance. Today, the FAIR plan does not have adequate rates and is not allowed to include the net cost of reinsurance. For example, if recently approved dwelling filing, in a recent approved dwelling filing, the FAIR plan had an indication. So basically, the need, based on the exposure, the need for the FAIR plan was actually an 80% rate increase, which is astronomical. They did request 48.8%. What was received, what was approved, was 15% from the CDI, California Department of Insurance. So if the FAIR plan is unable to cover the costs when there's a wildfire loss, it is authorized by law to assess the private market to pay for its claims. An assessment is a concern for the overall insurance market because it essentially means residents in inner city areas are going to end up subsidizing losses in wildfire areas. It is also a concern because it could drive more insurers to withdraw from the market. They end up in they end up paying the claim they never receive the premiums for. Go to the next slide. Figure out the best way to, if the home hardening discount we touched on a little bit, there's 2 discounts available. There's actually 3 discounts total. So we've got the Firewise discount as an example. Paradise is a Firewise community, that's a 10% discount.
Yeah,
And
Phil,
then
you
there's
can
15
skip this part because we got Carl who's going to cover this. So thanks.
Okay, perfect. But just some quick things. So the Fair Plan did
Well,
launch
I'm sorry, I didn't mean the whole slide. I meant the discounts.
the discounts.
So yeah, no, you're still on here. So you're gonna do a monthly payment option soon. When is the operating platform supposed to be in place? The new platform technology.
So I believe it's October, so it's this month. It's been testing it, and it's unfortunate because in the last 60 days, I mean, I think the application volume's around 1,000 applications a day right now, which is just astronomical. And
Sorry, you're getting 1,000 a day?
Yes.
Oh, geez.
So from a timing standpoint, really, I think State Farm's announcement was part of this domino, but it's driving a lot more business to the Fair Plan. And so again, they're doing everything possible, but this technology change, so the whole platform is being changed this month, and so we're doing everything we can to avoid any kind of disturbances, interruptions. But that's always a challenge, and it was planned for a down month, but this wasn't something. It was after fire season. It was something that we didn't anticipate. So hopefully there won't be interruptions, but they're doing everything they can, working hard to make that as seamless to the customer and the brokers as possible.
Yeah, no, I mean, I listen, we try not to demonize anyone or anything, right? This is a complicated situation. When if everybody heard what you said, that at the time of the campfire, that there were 50 employees at the Fair Plan, and now you're processing 1,000 applications a day or a week? A week.
That's a day.
Oh my God. All right. So let me ask you a couple quick questions. I know we have a lot of material we got to cover here. We had a question from Paul Weber. Won't the Fair Plan become underfunded if insurance companies continue to stop doing business in California? I'm going to answer that. That is a legitimate concern. And that is one reason why Governor Newsom and Commissioner Lara made their announcement a few weeks ago, that we have to stop the bleeding here of the private companies saying we're not going to write any new policies, because the second part of Paul's question, will Fair Plan rates stay high? I guess, Phil, if I were to ask you that question, I think I just heard you say the answer to that is going to be yes. In fact, they're going to get higher. Is that a fair answer?
Yeah, it's a process, but it's based on the rate need, and the reality is the more the Fair Plan grows, the more exposure there is. The bigger our limits are, the more exposure there is, and that's to have adequate rates. I mean, that's imperative. I mean, to actually be actuarially sound. I mean, that's the bottom line. The ability to pay claims is first and foremost, and the more you're right, the more exposure you have, the more you need in reserves.
Right. On the other hand, the Fair Plan doesn't insure liability. It doesn't insure water, wind, right? So in theory, it should be, that should help balance, but obviously it's complicated, right?
Well, the TIV adds up. I mean, the coverage, the total insurance value adds up so fast. I think we all see it. We can just imagine. It doesn't take much to get to a $3 million limit on a property.
Yeah. All right. Tomas Hernandez asks, is there a financial limit or exposure cap for the Fair Plan? What if it fails?
Well, again, the model is we would assess the insurers. And so as an example, the company that has 20% they would get 20% of the bill if there was a gap in what needed to be paid. And on down the line, it's based on market share. So, and the companies obviously know that, and that's something they take. And even if they leave the state, they're required to support. It's a 2-year, I believe. I don't know the exact terminology, but I know they're on the hook for 2 years, more or less, even if they leave the state. So that's how it's designed.
Yeah. Okay. Let's keep moving. Oh, was that your last slide?
Yeah.
Okay. All right.
That's enough.
let's take a quick so I'm gonna go back to where we were. And we're going to give Warren Bullock a chance to answer that question of we're going to skip all these here because we went through those. Warren, tell us about how is this impacting property values, real estate transactions, buyers and sellers? And sorry to have punted you to the middle here.
No problem. Can you guys all hear me well? Okay, great. Yeah, sorry I got disconnected earlier. Thank you for having me. As far as how it's affecting the local real estate market, it's almost the number one question, almost even before what's the price of the house anymore, is what is insurance availability and cost. I do find a lot of people who think that there is no insurance available at all, which is not what the experience is, but we do find it to be quite expensive when compared to just a couple of years ago. So that is putting pressure on the local and whole state real estate market. However, both locally and statewide, there's low inventory, which helps keep the prices stabilized to where they're at. And in some locations, it's even pushing prices up despite the newer cost of insuring these properties.
Okay. Thank you. All right. So we're going to get back to the deck. Here we are. Here we go. All right. Pardon the technology. Just a few more things about the FAIR plan that Phil may not have had time to get through. There are add-on options that you can buy through the FAIR plan, and these are some of them. And a reminder, folks, not only will this slide deck be available to you afterwards and the recording of tonight's program, we will also make Phil's slides separately available. So we got a question in the chat about a DIC. That's this supplemental policy that you can buy to fill gaps in what the FAIR plan covers. If you have a FAIR plan policy and you can afford a difference in condition DIC, that's the way to get comprehensive coverage. A few messages from UP, as I promised, I have to remind you that no matter what insurer you end up with, you want to get your dwelling coverage limit to be enough to replace your home with one of similar size and features. And this is a suggestion for how you figure that out by knowing what your square footage is and then dividing the coverage A to figure out how much money you'd have in insurance benefits to pay a builder. These are some of the things that matter to having a good, strong policy that's going to get you back close to where you were after your loss. Having replacement coverage, having extended replacement, having coverage for building code upgrades, having enough ALE, although in California now, thanks to a lot of hard work by a lot of fire survivors, we have now, your policy has to give you up to 36 months in California. So it's more important to pay attention to that the dwelling, how much you're insured for your dwelling, and recognize that that your policy does not cover flood, earthquake, earth movement unless you buy a separate one. And then, of course, today, excuse me, lots of people are carrying higher deductibles because of just trying to bring the price down and just making those decisions. There are still, your policy is going to have limits on things, specific things like collections, guns, silverware, furs, money, business equipment. So when you're renewing, those are some of the questions that you want to ask. Will it cover the cost of rebuilding? And how about these other things? My home-based business, a lot of people work from home now. Will your equipment be covered? Is it capped? A lot of policies have a $1,500 or $2,500 cap on those specific items that we just showed you. Of course, today everybody wants to know what discounts can I qualify for, and how much can I save if I increase my deductible. Here's some tips to save money. Seek out a proactive insurance agent or broker, somebody like the two gentlemen we have here. Do as much mitigation as you can. We're going to be talking about that now. Raise your deductible, find out what it would cost if you had as high as a $5,000 deductible. That's what I carry. Prevents you from making those small claims that can put you in the higher risk category and cause you to pay even more. And again, I don't mean to be insensitive. I know a lot of you lost your homes, and so you have that claim on your record, and that puts you in a higher category, and that is very, very hard to deal with. Reducing or eliminating buckets of coverage that you might be able to live without. So high dollar limits on contents, or if your insurer will let you eliminate coverage for other structures, maybe it's going to save you money, maybe it's not going to be worth it. Bundling is more important than ever, putting your home and your auto with the same company. So now I want to get into what can we do. We've heard how rates are going up, and they're probably not going to be coming down anytime soon, although we are working so hard toward that. What can you do? You can reduce risk and improve your chances both of your home not being damaged or destroyed, which is, of course, one of the most important things you can do, but also so that you will be more attractive to insurers and qualify for better rates and have more options, right? So before I turn it over to Lisa Strange, our friend from the Department of Insurance, I want to compliment her agency on how hard they've been working to try to get this crisis under control. And years ago, the department had gone to the FAIR Plan and said, we want you to sell a more comprehensive policy. We want you to make your policy more like a home policy so that it covers liability and water. And the FAIR Plan said, no, thank you. And so there's been litigation going on. So the department has seen this coming. They're trying to strike this balance. They're enforcing the non-renewal moratoriums. They're requiring insurers to reward mitigation. They're requiring insurers to tell you what your score is. And they are working very much with the FAIR Plan to try to make this work. You heard Phil say the FAIR Plan wasn't really built for this, right? There's a lot of pressure on the FAIR Plan to increase their limits. Right now they've got this commercial limit of 20 million per location, but condominium associations are getting crushed because that's not enough coverage for them, right? They want 20 million per building. So if there's multiple buildings, they want to be able to get that much more coverage, but the FAIR Plan is saying we can only increase so much, right? So that's happening. These are all things that are happening. So Lisa is here from the department. She's going to give a brief overview of some updates from her agency. So Lisa is the Northern California Outreach Manager. So as you might imagine, she's been very, very busy lately doing things like this. So thank you so much for being with us, Lisa. And you can walk us through your slides.
Great. Thank you so much. Can you hear me okay, Amy?
I sure can.
Great. Thank you. Thank you, everyone. It's always a pleasure to share updates with the residents of Butte County. As some of you know, I've been assigned this region for 3 or 4 years. They tried to reassign me from Butte, and I said, no way, I need to keep the residents there. So happy to be here to share sort of some updates with you. Some of this may sound familiar to you, so I'm just going to kind of quickly touch on it. This is the Safer from Wildfire framework that the Department of Insurance worked with the state's emergency response and preparedness agencies on to really just create a list of actions you can take to protect yourself from wildfires. The regulation directs companies to provide discounts to consumers with transparency about your risk rating. So the regulation was approved last year, and then insurers had until April 12th of this year to submit their rating plans to us. And so we are still in the process of approving those and hope to have that done by the end of this calendar year. The FAIR Plan has already been approved and is giving discounts, so we're excited about that. And the rest, we're working hard on to get those approvals for you by the end of the year. So the regulation requires insurance companies to recognize the benefit of safety measures such as upgraded roofs and windows, defensible space, and community-wide programs such as FireWise USA and the Fire Risk Reduction Community designation, which I'm happy to say currently includes 3 counties, and Butte is one of them. So that's great. So the first step is really to protect your structure, and that's pretty straightforward. Class A fire rated roof, enclosed eaves, fire resistant vents, multi-pane windows, and a minimum of 6-inch non-combustible vertical clearance from the bottom of the exterior surface of the structure. And I know many of you in this meeting are familiar with these best practices. So that's sort of step 1. And then next slide, please. Thank you. And so then step 2 is to protect the immediate surroundings. And so some of that work can be clearing of vegetation and debris from under decks, clearing of vegetation, debris, mulch, stored combustible materials, and any and all movable materials from within 5 feet of the building being evaluated. Incorporation of only non-combustible materials into that portion. And then 4th, removal of combustible structures, sheds, and other outbuildings from immediate surroundings of the home to at least 30 feet from the building being evaluated. And now this term that I keep saying, building being evaluated, is the residential or commercial structure in question. And it does include decks that are attached or adjacent to the structure. So just wanted to share that. And then for the purpose of this regulation, that building being evaluated should comply with Public Resources Code 4291, and then any other local ordinances that govern defensible space. Next slide, please. So we've got the structure and the surroundings, and now the final step is the whole community, which is step 3, which is really an effort to obtain a community level mitigation designation, like I briefly mentioned a few moments ago, which would be a FireWise USA site in good standing, or a designation by an FRRC designation, which is through the Board of Forestry. I'm sure most of you know, but a FireWise program is a nationwide program created by the National Fire Protection Association. And I'm excited to share that there are more than 700 of those communities now. When we first started talking about this regulation a year and a half ago, there was only about 500. So they're popping up all the time, more and more forming. And we're really excited about that as California efforts to ensure communities are prepared against wildfire. Next slide, please. Thank you. So as Amy mentioned and others have mentioned, you've got these discounts for sort of doing that work, but along with these, transparency is another very important benefit of this regulation. And we learned through all of our meetings up and down the state that most folks did not know that insurance companies assign a risk score to your home or business. And they really need to know this information, because if you know about the risks on your property, you can take action to reduce them and make yourself and your neighbors safer. So for the first time, this regulation requires insurance companies to give you that risk score and tell you how they created it, like what factors went into it. So what is a wildfire risk score? Well, Fireline and CoreLogic are 2 of the more common private companies that insurance companies get their information from. There are other companies that provide this, and now some insurance companies have come up with their own mapping system. But they are designed to, these scores are designed to predict the propensity of a structure in that location to burn in a wildfire, not when or where a wildfire will happen. So as I mentioned, some of the main factors considered in the score are vegetation and slope, and access with one lane and dead end roads that would be a problem for emergency vehicles to get to the fire, right? So those are some of the factors that are considered in your score. And it's important to know that the Department of Insurance does not determine which areas are considered high wildfire risk areas. We have the responsibility for enforcing the insurance code, and that code does not prohibit homeowner insurance companies from adopting this criteria while they rate your premium. However, what we do is make sure that those rates are not unlawful or applied in an unfair, discriminatory manner. So that's really what we're here for. And then there are a couple times during the sort of life of your policy or while you're trying to get a policy where you will be provided this risk score. So I wanted to just outline those for you. When you apply for a new policy or within 15 days, you need to be provided your wildfire risk score. Before you renew your policy, which is 45 days, before you are non-renewed with at least 75-day notice, and when you complete mitigation on your property and you request a revised score. So once you get that score, if you do not agree with it, you can appeal that score with your insurance company, and that's very important. And then once you receive the response back from that, if you're not satisfied with it, please give the Department of Insurance a call and let us help you. We're definitely here and on your side. And I believe at the end, maybe we'll have, or I can put it in the chat, our information, but it's 1-800-927-HELP, which is 4357. So
Actually,
thank you.
here you go, right here, Lisa.
Thank you.
Yeah, so we've got this one here since you already covered the last slide. What's a risk score? Thank you. I want to ask you one of the questions that was in the chat, if you don't mind answering it. If you prefer to kick it down the road and have somebody else answer, that's fine. D. Riley asks, if by law a California insurance company can only raise a homeowner's premium 7% without involving a public hearing, how can the insurance companies now charge double or triple rates? So you can take a crack at this, Lisa, but I imagine Carl may also be willing to help you.
Yeah, so thank you. That is a great question, and it is one that we do get all of the time. And what I can say is that it's important to know that the law does say that if you seek a rate at 7% or greater, that you may, or maybe it even says you will go to a hearing. But we know from our rate regulation branch that since 2014, there have been over 430 personal line rate filings seeking a rate increase of greater than 7%. And I think only 10 of those were even intervened and none went to a rate hearing. So I think, and don't quote me on this, but I think that's part of what we will try to sort of clean up, if you will, with the regulation that Amy briefly mentioned that will be happening later on next year, is sort of what does that, what does Prop 103 say? And, because we really want insurance companies to, request the rate that they need to remain solvent, right? We don't want them to request a lower rate that doesn't keep them solvent and then to stay under this threshold of worrying about going to a hearing and then sort of getting back in line later, right, to request more because that wasn't enough to keep them solvent. Because as you can appreciate, what that really does for us too is sort of bog down the time it takes to approve these rate plans as well. So kind of a lot there, and I hope that kind of addresses the question. I don't know if Amy or Carl.
No, I think so. I think so. Since we were talking about risk scores, Phil, does the FAIR plan use risk scores? Oh, darn. Can we get you off mute?
Yeah. There is a brush surcharge that is factored in. Okay.
But because I noticed in your slide you said something about Zesty AI. I mean, is that like
that's what's coming future filing? That's what's being proposed.
Okay.
It's not today.
Right. Thank you. Okay. Let's see. One more for you, Phil. Fair Plan wants us to have our roof inspected by mid-December. If they don't like its condition, can they non-renew us?
No, that is not usually not the intent, and make sure you work with your broker, because again, it would just determine the condition of the roof would determine whether it would be, claim settlement would be at actual cash value or replacement cost. So just work with your broker, and I'll put my email in there too if there's anything I can do to assist that the interpretation of that form. I'd be happy to help, and they definitely give you lots of time to respond back. But usually they just want clarification or additional information on that.
Okay, thank you.
I'll put my email in the chat. Is that okay?
No, that's exactly okay. Very okay. Thank you. So Carl, I think we are up to you. Is this the introduction to your deck, right?
Yeah, that's beautiful, isn't it? That just makes everybody want to pay attention.
Yeah. I want to now turn it over to my my pal Carl Sussman. In the introduction, I mentioned how helpful he's been for the last few years, really eyes and ears. So Carl, I'm going to do my best to advance your slides, your fancy slides, I will say.
Well, I'll tell you the first thing is we'll skip if you want to go to the tree and just let me explain what the tree is there. All right. I do these presentations and I try and make it a little bit interesting, because I know that when you're growing up, your ambition is, I want to be an insurance person when I grow up, not a doctor or a lawyer. Everyone dreams of being in the insurance business. So I thought I would show you what I've actually come from. So if you want to go to that slide, the family tree, I'll show you what the stock that I've actually come from.
Okay.
And this is 100% true. You could just start tabbing through them. So my father was an insurance sales executive, and of course he married my mother, who was the same. They then went on to have me. I, of course, became an insurance agent. My wife, of course, she's an insurance agent alongside me there. My sister, she was a claims adjuster for one of the captive insurance companies. Her first husband was a claims manager. And that's not enough, because if we keep going down, my nephew, their son, is now working in our agency right now, because, you know, why not? My uncle, he was a captive insurance agent, and I believe his wife, yes, she's an insurance agent that worked with him as well. And you can guess what happened with one of their kids. Of course, she's in the business. And then even if you want to go a little bit further, I had a cousin from the other side that ended up being in IT for an insurance company. Now, the crazy part is my son doesn't care about insurance. And guess what else? My daughter, no interest. So apparently the insurance gene has stopped at my generation. And again, I bring this to you just so you have an idea. This is, I've been in insurance basically since in utero, probably. And since being an adult and going through school, I've gotten my master's in insurance through Columbia University, and probably 16 other alphabet soup designations, just because I'm an insurance nerd and I like this stuff. So I appreciate you letting me come on tonight to go over what's really exciting, which is some good news on the discount front, because with everything going on, and you heard this and you've seen the numbers, it's a great day when I can say, hey, guess what? There's something you can do to actually save money, let alone save money on the California Fair Plan policy, because that's what we normally look to and think, oh my God, we have to go to Fair Plan. It's going to be so expensive. So this way, they're the first ones that stepped up, put together guidelines for you to be able to save money on your policy. Some of these you'll notice are familiar because Lisa went over them, and they're similar to some of the oh gosh, the community. I'm blanking out now on what it's called, the fire safe community. Some of them are similar to the regulations that are there, but these are discounts that are now applicable. If you have a California Fair Plan policy, you can get them today, literally. And let's go through them so I can tell you how you can qualify for them. Now, there are two discounts that are available. One has to do with things that you can do to your actual structure. And Amy, you can just click through as you go. Nothing, doesn't matter. One is going to have to do with things you do to your house to make it more fire safe. The other are things you can do to your surrounding area to make it safer. Now, you can get one of the discounts, you can get both of the discounts. And if you go to the next slide, you'll notice that if you end up getting both of them, one is 5%, one is 10%, but you know, this is insurance. So you're only going to get 14.5% if you get both. And I know that math doesn't seem to work. It doesn't, but it has to do with the fact that the discounts, when they stack, you lose a little bit in there. Now, I'll pause for just 1 second because I know one of the things that we get asked a lot when it comes to doing things around the home to make it safer is, well, that's the city land, or that's my neighbor's land. What am I supposed to do? How am I supposed to deal with that? Fair Plan is going to be very good about this. I know from clients that we've already submitted the discount request for. They understand that, right? If it's city property, they understand that. If it's not your property, they understand that. So don't let that fear dissuade you from going forward and doing these things. And again, at the end of the day, it's terrific to save 14.5%, but the real win is your house is less likely to burn down. And again, Doug, you have my sympathy. I mean, I can't even fathom what it would be like to literally lose everything like that. We had to evacuate from one wildfire at our home, and we were away for 3 or 4 days. And I just that fear, and at least we were able to come home. It was all right. I can't even fathom what it must have been like for you. So let's go through a little bit of the specifics on what you can do to the house and what you can do to the surrounding area in order to qualify for these discounts. And again, as Phil had mentioned, you can request these discounts. They're available through brokers, and they're available directly through the California Fair Plan. So you may have a policy directly through the Fair Plan. You might have it through a broker. Whoop, I'm gonna go back. There you go. Either place will be able to send you the form, and there's just one form to sign with little check boxes that you sign your name and you say, yes, I meet these qualifications. Let's look at the first one. This is the 10% discount, and these are the things that you have to do to qualify for them. The structure has to be what's called a Class A fire-rated roof, which is comp shingle, stone, concrete, clay, metal, right? Something that's less likely to burn. No wood shake roofs, right? Which makes sense. They also want to have 6 inches of the bottom of all exterior walls non-combustible. Okay, now I put bricks. It doesn't have to be bricks. It just has to be something that's non-combustible. The next are the vents, right? We're talking about what's above, near the roof line now. And I'm not a contractor, so I'm really bad about picking the right pictures for this stuff. But you know what I'm talking about. The air vents around your attic. Those need to have some form of closure so embers don't just go shooting in there. And again, that makes sense. The next one, I think, is probably the most difficult to do, which is that the windows must all be double paned. Now we're talking about some money, right? I mean, we can get some stuff done on the first few things, but when we're talking about redoing windows in your entire house, you could be looking at some real money. So keep in mind that this is not just about saving money on your insurance premium with the Fair Plan. You are literally making your house safer. And I'm not a real estate guy, but I'm sure Warren would say that the home will probably have a higher value if it has all of these things done. If he's listing a house and he's able to say, hey, it qualifies for these discounts with the Fair Plan, I would suspect that's probably going to be a good thing. Finally, the eaves have to all be closed. Thank you for the thumbs up.
Sorry.
What, Amy?
Nothing. Keep going.
No, Warren gave me a thumbs up, so I feel vindicated. Thank you, Warren. So that's the 10% discount, right? That's the stuff that we can all have complete control over. It's our stuff. It's our house. Now let's look at the next slide and we'll get an idea of what we can do to the surrounding area, okay? Now, protecting what's around, it's a little bit more complicated, but you can do it. The first is clearing vegetation and debris from around the house and under decks. Apparently, this is a big one that they see during claim time, is you'll have decks with just stuff underneath it, right? Nature, nests, all sorts of things. They really want you to clean that stuff out. Mind you, all of these things, this is based on actual experience, right? They know that these are things that when there's 2 houses next to each other and there's a large fire coming, they know which house survives and which house doesn't. These are the things that can make the difference between your house surviving and not. So the first thing has to do with being sure that you've got vegetation debris cleared from under any decks. Also, I can't see that one slide, so let me just jump to it on my screen so I can look at it. Which is it? There it is.
This one?
There must be no, you were in the right spot. It was covered up because you went through it fast. That's all right. it's talking about there being an ember resistant zone. You see where it says all you see is ember resistant. There you go. So they're talking about creating a 5-foot zone around the house. Okay. Basically, that is not kindling, waiting to go. And they say ember resistant. They're not being crazy. They're not saying you can't have plants. They're not saying you can't have trees, but they're trying to tell you that, look, we want to have a buffer around your home as much as possible. Okay.
Right, and just a reminder, we do have Stephen Hawks with IBHS who's going to go a little more into the details of this.
I can't wait to hear Steve's presentation. And I've also told our clients, as we've been submitting these discount forms, I'd love to please let me know when they're coming to inspect. We'll get to inspections in a second, because I want to see exactly how this comes down. The next thing has to do with defensible space around your house, brush, removing debris from the yard, trimming trees, removing brush, debris, and it gives a public resource code, which is only about 5 pages. I will not let you put you through that, but you can imagine it's just logical stuff, guys. It's really just a matter of clearing stuff that's around the house. The other one that's specific is that there cannot be a combustible shed or outbuilding within 30 feet of the main structure. This one sort of surprised me. I thought, well, if it's safe, right? I mean, if it meets all those qualifications, it should be okay. For some reason, history and experience has shown that having that separate structure within 30 feet is a bad indication for the fire catches it and it ends up with your main structure. So if it means you might have to get rid of the shed, but you're going to pick up the discount, it might be worthwhile. And finally, I put on there more details to follow just because this is brand new. This was August the 23rd. So we sent out notifications to everybody and let them know this is coming. And as you can imagine, everyone says, oh, I qualify. Oh, I qualify. And that takes us to the next slide. And this is really important that everyone is aware. The California Fair Plan, as they should, are going to inspect 100% of the properties that submit a form for these discounts. There's no blind faith on this. Now, this is where my big question comes to mind, right? We're submitting all these forms and we're letting it go. Now, Fair Plan is going to give you the discount effective the day you sign that form. They're going to take your word for it as far as immediately giving you that discount. However, if it takes them 30 days to come out, 40 days to come out, who knows? As you heard, they're crazy busy right now. 1,000 apps a day. I mean, I can't even fathom, my hat's off. I've been working with the Fair Plan for 30 years. I mean, I can't fathom that kind of volume going on there. They must be working their fingers to the bones. But anyway, be aware that they are going to inspect 100% of the risks that request this discount. If it turns out that they come out, well, there's the shed 10 feet away and the trees hanging over the house, they're going to retroactively go back and remove the discount. So there's no free ride. If you've got these things done and they come out and see that you've got these things done, great. If you don't, they're going to come out, they're going to remove the discount. What I would suggest you do is, if you do have a broker that you're working with, send them pictures. If you're working directly with the Fair Plan, I won't tell you to send them pictures because I would get more hate email from Fair Plan if I said anything like that. Let's just leave it with brokers. If you're working with a broker, enlist their help, right? Send them pictures. Say, what do you think? Does this look reasonable? Because as brokers, we're going to be interfacing a lot with the California Fair Plan. We're going to get an idea of what's going to be acceptable and what's not. So take advantage of those connections and those relationships, so you're not taking up time, and so specifically what it is you need to do to qualify for them. Because again, 14.5%, that's not chump change. That's significant. And as you've heard, the rates for Fair Plan are going to go up. They're going up based on, again, history, statistics, costs, everything else. And that discount is going to mean more dollars savings as the premium continues to go up. So keep in mind that you will get an inspection done anytime you request a discount. And that's really all I have for you. It's, like I said, it's brand new. We're learning as we go. And I'm just very excited that the Department of Insurance and the California Fair Plan were the first. It was the first one out the gate to be able to implement this and get it approved, and it's off to the races. Boom! It was literally within a week, I think, of the announcement that this discount would be available, and boom! Fair Plan came out with it. Right? I mean, everyone likes to try and make fun of the Fair Plan, but hey, they were the first ones to get us out the gate to find a way to save everybody some money. So I'm just happy that that's something that we have available to offer.
I agree. Phil, did it look like did you want to add something?
I didn't know people made fun of me. I would just say the other discount too, and we're finding more and more. So Firewise, Firewise communities, just I know they are within Butte, but just make sure that they're announcing if they're getting new people moving in, or just because we find that's a discount too, where it doesn't happen automatically. It's easy to get, and if anyone needs any help with that, just let me know or reach out to the representative of your Firewise organization, because that's 10% and it stacks on top of the hardening discount.
Yeah. So thank you so much, gentlemen. I really want to make sure we give Stephen a chance to do his thing. And then we have a few more questions. And if you can incorporate Stephen in your presentation, there's a question: who establishes the WUIs? Is it CAL FIRE? So if you can answer that one in your remarks, that would be great. So we're going to move on. Thank you so much, Carl. We're going to move on. There's Carl. There's his contact information, I believe. Or no, it wasn't. So you can, Carl, if you want folks to be able to contact you, put your stuff in.
I can put it in chat, but you can always reach out to United policyholders. They know how to find me, and I'm happy to answer any questions.
Yes, and you can find him in our professional help directory. So thank you for that. You've been hearing people talking about defensible space, why it matters. Firefighters will tell you it's one of the most important differences for them, if they can save a home or not save a home. And so without further ado, I want to turn this over to Stephen Hawks, who's been a real hero in this space for quite a while. He's the director of wildfire policy for IBHS. He's a retired assistant deputy with CAL FIRE. So Stephen has given us another sort of fancy deck. I'll do my best to keep with you here. Did it just jump on me? Let me see.
Yeah,
Nope.
I just went to the first video.
Okay.
Can you hear me okay, Amy?
I sure can. And thank you again for being with us.
And thanks for having me. And good evening, everybody. Steve Hawks, Director of Wildfire Policy with the Insurance Institute for Business and Home Safety. And as Amy mentioned, I retired at the end of 2022 from CAL FIRE, where I most recently managed the Community Wildfire Preparedness and Mitigation Division underneath the Office of the State Fire Marshal. Go ahead into the next slide. And while this video plays, it's going to show a lot of the wildfire research that we conduct at our research facility, which you can see in my virtual background behind me. It's located in Richburg, South Carolina. I'm currently at a hotel where I've been working out here this week. I'm normally located in Roseville, California. And so we are funded by the insurance and reinsurance industry, and we conduct research. We're basically the crash test dummies for structures. We expose them to wildfire conditions, both direct flame, radiant heat, and ember exposure, where we can take in the test chamber, the big box, concrete box that you see in my virtual background is a huge test chamber, and the bank of fans, we have 105 fans that are 6 feet in diameter that can blow, and there's the inside of our test chamber, that can blow up to 130-mile-an-hour winds. And we can, you can see the embers kind of coming out in the lower right corner of the screen. So we can generate embers and then cast them by our fans onto a structure and expose that structure to ember exposure best that we can simulate in a laboratory environment. It's pretty realistic what the actual exposure is during a real wildfire. And then we take these tests that we do or research, and we develop mitigation actions that homeowners, that business owners can implement on their structure and the immediate surroundings to reduce the wildfire risk to their structure. You can go ahead to the next slide.
Okay.
And so this is just a slide of the inside of our test chamber. And you can see the ember generators are casting embers out. The wind that's coming off of the bank of fans is then blowing those embers onto that structure. And if you look at the top corner of the structure, at the peak of the structure, you'll see a kind of a line of embers going up over top of the structure. You'll see embers flowing around the sides of them. And then the next thing is there's kind of a circular area right in where the cursor is at, right there, of airflow. And so these embers are cast up against the side of the structure, and then you'll see that they flow to the ground. And there is a very bright orange line of embers that's right at the base of the wall and the ground. And the heavier embers that are cast up, go up to the base right there. Yeah, up right there. Perfect. Yep. They flow, the heavier embers that are cast in the air that can travel very long distances in an actual wildfire, they fall to the ground and travel right against the base of the wall and the ground. And so that's the reason why we say that the 6 inches vertical space from the ground up the side of the wall needs to be non-combustible, because those embers right there, along with any debris that has a tendency to accumulate at the base of this wall and ground, is not a good place for embers to then find that debris, ignite it on fire, which can extend that fire to the house. You'll notice also that a lot of embers are flowing away from the structure out, and they form a distinct line. Go ahead and click onto the next slide. There's a couple of things that, oh, I didn't put the arrows in, I see. But there's a distinct line of embers that are out. I'll go back one. A distinct line of embers at 5 feet distance out from that structure that are flowing. Yep, correct. Right in through there, and go a little bit further up to the right, up through there. You see that line of embers? That's at 5 feet, and that distance is a function of the height of the structure. And so that is why that 0 to 5 foot, and we call it the non-combustible zone, is so critical to wildfire mitigation. Those embers that are flowing out away from the structure, if there's anything combustible in that zone, they can accumulate around that combustible item and then ignite that item, and potentially that fire could then extend to the structure. We just, over the last 2 days, maybe you've seen it, we did a live wildfire demonstration with Good Morning America, doing a very similar demonstration to what you're seeing here in this photograph, where we had 2 sides to a structure, a good wildfire prepared side and a non-wildfire prepared side, and with an attached deck to both of them. And we cast embers on them, and we saw that the fire ignited in the bark, extended to the wood deck, which extended to the house. And we had to suppress the fire, but that would have brought the structure completely to the ground had we not done that. Go ahead. And so embers of this are reason we really focus in on embers, because they are the leading cause of why structures ignite from wildfires. The other two as being direct flame and radiant heat.
Sorry, I didn't mean to interrupt, Steve. I was just going to add that one of the cost-effective things that you can do, I mean, putting a screen over your vents is something that is not expensive, right?
Right, and the screen size needs to be between 1/16 and 1/8 of an inch. We found in our laboratory environment that anything that's screen size that's greater than 1/8 inch will allow embers to pass through it with enough energy in them that if they land on something combustible on the other side, they will ignite that item. At the 1/8 inch, embers can still pass through. They just don't have enough energy in them to ignite the items on the other side. So this is, go ahead and roll this video. This is very similar. Yes, go ahead. Very similar to the demonstration we conducted today with Good Morning America. And you can see in the wood bark mulch on the 0 to 5 foot immediately surrounding the structure that these embers ignited that. They're going to burn these plants that are here within that zone. They extend to the siding of the house and up underneath the eave line. They eventually, there's a gable end vent up there in that corner. They extend through that gable end vent, and they also were starting to break that window. One point of distinction, I know it was mentioned that dual pane window, but our research determined that not only should it be dual pane, but both panes need to be tempered glass, which is a higher heat resistance than regular annealed glass. So in this demonstration here that was conducted back in 2019, you see there's two sides to the structure, very similar again to the demonstration we did today, where you have the mitigated side on the right-hand side and the unmitigated side on the left-hand side, and you can clearly see the results of what happens with an unmitigated structure when it's exposed to embers in a wildfire. Go ahead to the next slide. Oh, and sorry, that's a little bit hard to see, but as I mentioned earlier, I used to work for CAL FIRE and manage the damage inspection program. And unfortunately, there are almost 57,000 structures that have been damaged and destroyed in California since 2014 that are in CAL FIRE's damage inspection database. And what that database is telling us is that over 90% of structures, when they catch fire, they will be completely destroyed. So it goes without saying that we need to prevent structures from catching fire in the first place. And that's why we conduct our research and develop all these mitigation actions that can help homeowners with that as they build more resilience into their property. So what you see here on the screen is in response to all these destructive wildfires, the insurance issues, we've developed a program called Wildfire Prepared Home, and it is only located in California right now. We are looking to expand out to some other Western states, but the brown boxes you'll see, those are the current requirements. This is called the base level of Wildfire Prepared Home, and you'll notice a lot of those mitigation actions that are in those brown boxes were previously called out by both Lisa and Carl. And so again, this is all based on the research that we've conducted to other organizations like the National Institute of Standards and Technology and others have conducted. And these are the best guidance that we can provide at this point. And then one more click.
Okay.
And it should bring up, there we go. Here's the plus level in the blue box. So the base level is based on protecting your home from ember exposure. The plus level is fully protecting your home from all the exposures of embers, radiant heat, and direct flame contact. So you can see there's a lot of non-combustible materials added in here to this list for the plus level. Go ahead with the next slide.
Okay.
And so if you are interested in the Wildfire Prepared Home program and receiving the designation from IBHS, and it does exactly what Amy mentioned earlier, is that one, it gives your home the best chance of surviving a wildfire. These are the actions that are based in science. We know that they work. We've also field validated these on fires like the Camp Fire in a post-fire analysis, the Glass Fire in 2020 in Napa and Sonoma counties, and others, the Marshall Fire in Colorado. And in just a couple of weeks, I believe we're going to be out in the Lahaina Fire in Maui to do a post-fire analysis of that one as well. But if you want to achieve the designation, not only does it give your house the best chance of survival, but it could mean that it leads to better availability and affordability of insurance for you. So how do you achieve the designation? You go to our website at wildfireprepared.org and look at the homeowner's guide. There's up in the upper right corner, there's a homeowner's resources. Click in there, find that homeowner's guide, download it, run through it, read it several times, make sure you understand it, walk around your house, ensure that your home meets that standard that you're trying to achieve. If it doesn't, then work on those items. Once you believe it does meet the standard, then come back to our website and apply online, submit an application to us. We will then schedule Millennium, our company, to come out and do an assessment of your property and ensure that it does in fact meet the requirements of the program. And at which point we will issue the certificate that you see on the screen there. And then you can take that certificate and shop for insurance with it. The designation does cost $125 initial for 3-year period. And we're a nonprofit. We're not trying to make money off of this by any means. We're just trying to cover our costs to implement the program. And hopefully over time, it'll be self-sustaining and we can look at the cost of the designation. And what that gets you is a 3-year designation for wildfire prepared home. There is an annual landscape review at the 1-year intervals in between that. And at the end of the 3-year period, then you'll have to reapply to remain in the program. It is only a year-old program. And so we're continuing to evaluate it as the research evolves. We'll make updates to the mitigation measures that are a part of the program. And so you'll just continually come back and look at our website and see if anything's changed. I will note in Paradise that IBHS granted funding to the town of Paradise to cover the cost of this designation for the first 100 people that achieve that. So far there are 2 designations in Paradise. So there's still plenty of funding available to cover the cost of this designation in the town of Paradise. And go ahead to the next slide, which I believe is it. And so I can put my email address and some other links into the chat here, and that is it. Thank you, Amy.
Well, thank you, Steve. And I know that the head of your organization has family in Paradise, and that was impacted by the fires, and I know that you unveiled this very, very important program there. So thank you so much for all the work you're doing. We are at time, so I'm just going to zip through the last slides very, very quickly. Just some one ask. If you're interested in sending a support letter in, there's a bill that's been introduced by State Senator Mike McGuire that would require insurers to offer you a policy if you have mitigated your home. So not just give you a discount, but actually offer you a policy. So if you want to support that concept, this is who you can write to. Our final message, despite limited options and high prices, be prepared, not scared, get educated, seek out a proactive consumer-oriented agent or broker, avoid underinsuring your dwelling, compare with different deductibles. Always very important, take your cell phone, put the camera on video, go around and create an inventory if you haven't done that. And then pitch in your community to whatever fire safe cope activities are going on, because not only is it important that you reduce risk at your home, but it's important that your community does it as well. Those are the 2 proactive things that will qualify you for the maximum discounts, both your individual and the community. And just remember, a lot of people are saying, I just can't keep paying for this, and I paid off my mortgage. I'm here to remind you that the max grant that you could get from FEMA after a disaster was $41,000. It's needs-based. The average grant is somewhere around $5,000. SBA loans are low interest, but they have to be repaid. And I really understand how hard it is for households. My whole team understands it. That's why we are working so hard to help promote these programs that give you fee waivers and grants and different ways to help you pay for the mitigation. We have resources for renters. This is the link to our RAP resource center, where you can find out who's doing what in your area and what you might be able to access in terms of technical help. I want to thank our partners with the Listos program that are working so hard to get Californians ready. My organization has your back when insurance matters. That's why we're here. We don't sell anything. You can't hire us. It's our privilege to be able to be a conduit of information. It's our privilege to have partners like Butte County, like the Department of Insurance, like our panel that is here, IBHS, the FAIR Plan. These problems are not simple. If we had a magic wand, we would be passing it out to you. We're all doing our best here to adapt to what's happening. You know, do we want insurance companies to behave better? Yes, we always do. But this is a balancing act that's going on. So thank you, Supervisor Teeter. Thank you, Katie Simmons with Butte County, Warren, Phil, Lisa, Carl, Steve, my staff, Katie, Ben. Thank you so much for all the work that went into tonight's program. We got to almost every question, and that was a lot. So with that, again, the recording will be up on our website. You can watch it on YouTube. Please share it, friends and neighbors. Please do not hesitate to reach out to us, to reach out to any of the people that were on here. Doug, do you want to say any closing remarks?
Well, I just want to thank you, Amy, for putting this together. Obviously, the California Department of Insurance. Thank you, Lisa, Warren, Carl, Steve, Phil, and your staff, Amy, for getting this going. And I hope we helped some people out there. I think there was over 120 participants, which is a good turnout. So spread the word.
Thanks all. Have a safe and pleasant rest of your evening. And if you are not signed up with UP to get updates, please do register with us. We do programs like this on a regular basis. We send out tips every month, and we're here rooting for you and your family and your household's economic health. And so good night.
Take care, everybody.
Thank you.